Hello, this is Edwin Choi. Recently, many Hong Kongers have started to pay attention to the UK property market for various reasons. They might consider buying a UK property to live in, or they may consider buying a UK property for investment purposes. And a lot of them assume they have to pay for the property in full price at one go. But in fact, there are many ways for Hong Kongers to apply for mortgage for a UK property from a UK bank. And you might have a lot of questions about how much they want to lend, such as the LTV ratios, and how much can you borrow? Are there any income proof requirements? And what is the application procedure, how easy or difficult it is? And fortunately today, we have here with us a UK property mortgage expert from Capricorn, Gavin Fitch, sitting here next to me, and he'll be answering all the questions you might have about UK property mortgage. Thank you very much, Gavin.
Thanks very much, Edwin. Happy to be here and looking forward to answering some questions about mortgages.
So my first question is, if I were a Hong Konger, can I apply for a UK property mortgage from a UK bank?
Yes, absolutely. There's kind of a misconception that a lot of people kind of don't really realize how easy it is for someone who's based overseas, particularly over here in Hong Kong, to be able to get a mortgage on a UK property.
So if I've decided to buy a UK property, what is the application procedure? Is there any difference between a new property or a second-hand property for an application for a UK property mortgage?
Yeah, absolutely. So there's a few things. So this is where Hong Kong mortgages are very different to the UK. So in the UK, it's very kind of black and white about what you're going to be using the property for. So you're either using it as a residential, which is a self-use property, and that is a property that can be used by yourself or close family members, but you're not allowed to rent it out for investment purposes. And the second type is an investment property, so a buy-to-let. And this is where you're allowed to rent out the property, receive rental income, but while that mortgage is in place, you and your family are not allowed to live in the property.
So residential versus letting.
Absolutely.
And is there any difference between a first-hand to a new property or a second-hand property for the mortgage application requirements?
So one of the things about Capricorn is we're actually experts in the new build market. Arranging a mortgage for a new build property is a bit different to a second-hand property. With a second-hand property, it's quite straightforward. Go as quickly as you can. The seller can make the sale as quickly as possible, and you as the buyer can kind of obtain the property as early as you can. For a new build property, unfortunately, you're not working on your own timeline. You're working against the developer's timeline.
Right, because they are building a property.
Exactly.
Right.
So there's a lot of instances when the properties are purchased off plan, and this might be kind of 2-3 years away from completion. So unfortunately, in the UK, the bank's kind of really prepared to be committed to the mortgage until we're kind of 3 to 6 months away from completion. This doesn't mean that we're not happy to have that initial chat and kind of give you an idea of what is going to be available. But in terms of actually starting the mortgage application, it kind of can't really happen until we're, like I mentioned, 3 to 6 months away.
So you can get some sort of idea from the bank whether it's doable or not doable, and then 3 to 6 months would be the timeline to look at.
Exactly.
I see. What are the basic requirements for let's say a non-UK resident, a Hong Kong person, to apply for a mortgage in the UK?
One thing that a lot of people do think is going to be necessary, but actually isn't, is you don't need any UK income or any kind of UK credit footprint at all. First-time buyers, first-time landlords, people with no UK income can still get mortgages. That's no problem for us at all. A little bit about Capricorn, we're whole of market brokers, which means we literally have access to every single lender in the world that lends on UK property. As it is UK property, the majority of these banks are based in the UK, but some of them are based over here in Hong Kong, some are in Singapore, there's Islamic banks we can go to, and specialist offshore lenders, which really means that we do have kind of a solution for every situation.
So me being a non-UK resident, Hong Kong person, born and bred, have never been to the UK, I have my eyes on the UK property, I can come to you and you can arrange all sorts of lenders for me to make sure that is doable.
Yeah, absolutely. So there'll be a number of the high street lenders that you will have heard of, but as it is dealing with kind of international overseas buyers as well, there are more specialist niche lenders who kind of fit that little segment of the market that just simply aren't as well known. Because they're not as well known doesn't mean that they're not good quality lenders. Well, they're all professional institutions they're all regulated by the relevant authorities and have banking licenses as well.
What if I were a UK resident or a person who has applied for a BNO visa on my way to the UK but haven't properly lended yet or haven't become a formal UK tax resident yet? Is there any difference in the application?
So primarily it's kind of you're either a UK resident or you're a non-UK resident. Okay, so myself and you would be considered non-UK residents
because we live in Hong Kong.
Because we live in Hong Kong, we don't live in the UK. Once you're living in the UK and paying tax in the UK, considered a UK resident, and you have access to more options available because it's more of the high street lenders who simply don't deal with international clients. But there are still plenty of options for overseas international buyers, so that's no problem for us at all.
A lot of people have been saying on the street that even if you've landed in the UK, you still need to build up your credit history, you need an address, so it's not as easy as you think to apply for financing once you've landed. It might take some time. How true is that?
Yeah, so that's correct. It's not one of those where you can get off the plane and then you can apply for the mortgage straight away. It's all about kind of the credit profile that you're giving to the lender. So if you have a UK address and you build up a bit of a credit footprint, get yourself a credit card, open a bank account in the UK, hopefully get a job, pass your probation period, and start paying tax. All of a sudden, that's a much more attractive proposition than someone who has just landed in the UK and is kind of first stepping foot there for the first time.
So you might have to wait for quite a bit of time before you can properly apply for a UK mortgage as a UK resident.
Exactly. It's not one of those where it happens straight away. There is a bit of a lag time.
So Gavin, for a non-UK resident going for a residential or buy-to-let property, what are the basic requirements in terms of the loan-to-value ratio of the property or the income requirement for the applicants?
So first of all, the maximum loan-to-value that we can get is 75%. Okay, so that means on a £1 million property, you could borrow up to £750,000, for example.
Right.
Which means you only need a 25% deposit. 25% is really the minimum deposit that is going to be required.
Right.
When it comes to the income requirements, now again, as we mentioned previously, where there's two different types of mortgage, your residential self-use and also the buy-to-let, they have very different requirements. So for the self-use, because your affordability in terms of how much you can borrow is based on your income, for overseas buyers, the minimum income requirement it's £75,000, but that's after a 10% deduction for currency fluctuations. So basically add 10% to 75,000, it's about £83,000 equivalent. That £83,000 equivalent can obviously be made in Hong Kong dollars. That's no problem at all.
So that's £83,000 of annual salary.
Annual salary, yeah, that's correct. So for buy-to-let properties, they're mainly considered self-financing, which means that there's actually, for some lenders, no minimum income requirement, so they're not going to ask for any income proof effectively. If you do have a minimum £25,000 equivalent income, there's more options available and the rates become a bit cheaper. If you are earning over £50,000 equivalent, there's even more rates of it, or more options available, and those rates are even cheaper again. Okay. There is a concept in the UK called interest only, which is offered by literally all of the lenders that offer buy-to-let mortgages, and it's used by the large majority of UK buy-to-let landlords. So interest-only lending or interest-only mortgages are where you have your loan amount and you don't pay down any of the principal. So you're just paying the interest on that capital each month. At the end of the mortgage term, you still have the full loan amount and it needs to be repaid. Now, when we say repaid, people don't need to panic and think, oh, I need to whip out a couple of £100,000 myself. It's one of those where we just remortgage to another lender, okay? And because it's a couple of years down the line, hopefully the property is appreciated in value over time. So that mortgage that you're replacing might now be a lower loan to value, or you can kind of capital raise back up to 75% and release some additional equity. That cash can then be used for further property acquisition, for example.
So that's a refinancing exercise.
That's a refinancing
I think Hong Kong people are quite familiar with this sort of things.
Absolutely.
Is there a minimum loan amount required for a residential mortgage or a buy-to-let mortgage?
So in general, for most lenders, their minimum loan amount is £100,000. There are some lenders that can go a bit lower, but because they're kind of lower loan amounts, then usually those rates are a bit more expensive. So that's just something for consideration. In terms of kind of a minimum property value, given that the maximum loan to value is 75% and the minimum loan amount is really 100,000 for those more competitive rates, it kind of makes that that general minimum property value about 140,000. So we really do recommend that if you are looking for the most competitive rates and kind of the best quality deal, to look for 140,000 plus property.
And there's no differentiation in terms of the minimum loan amount for residential or buy-to-let properties?
So buy-to-let is more
favorable.
It is more the 100,000. Sometimes the banks can be a bit more flexible for self-use properties.
So that's why we will need you guys to help out with the 10,000 types of offers available at the table for us to choose.
Exactly. More than happy to help whoever we can.
Well, thank you, Gavin, for very detailed information. But I still have a few more questions to ask you. Can you stick around for the next episode?
Absolutely, happy to.
Thank you very much. See you next round.
想知道更多英國房地產嘅資訊，記得 like 我哋嘅 Facebook 同埋 subscribe 我哋嘅 YouTube channel 啦。